Hi, welcome to the market alert for Friday, the 18th of March 2022. So yesterday, stocks go full green on St. Paddy's Day ahead of massive OPEX, which is today. We'll look at that in a moment. The negative delta unwind trumps global stagflation fears until tomorrow's OPEX. Yeah, it's a massive one. Stocks slip after hours as UN Intel chief warns of Russian nuclear threats. This has changed overnight. The markets are currently moving to the upside. They've regained all of the losses that they had from that, and this is the big one for today, unless something happens in Russia, Ukraine. 3.5 trillion reasons to brace for today's massive quad-witching expiration. It's actually a triple because they got rid of the individual stocks, futures and derivatives back in October 2021, I think. And but they're still known as quad witching. There used to be 4 derivatives, but now only the 3 back to that we had for many, many years. So yeah, that's what we've got. And then there's some optimism in this news item, why gold will rise. The financial system has changed. It may have changed. It's not going to rise until it's allowed to rise. It's as simple as that. Until the likes of JP Morgan, Bank of America and all the rest do keep rigging the price with paper contracts, allow it to rise. No news today really. Existing home sales, they're expected to be down slightly from the previous, and the gold silver ratio that we've not looked at for a while has been hovering around the 78 to 76 level there. Just draw that in for you there so you can see. So I've got a bit of a retracement there going on, pulling back to possibly move higher and then send silver to the downside. If you're going to move the index to the up, then silver's got to go down and gold remain static. Let's have a look at the Dow. And we start off with the daily chart. Yesterday, you can see the market continuing to move to the upside. Like I say, there's no reason for it to move down. It's, everything's fine. The world's fine. According to the way these markets are traded, it doesn't really matter if there's a war going on. As we said before, the market's managing to move its way back up. And 89 and the 200 MA are the next upside target for the Dow. Like I say, completely illogical. Immoral, but there you go. The markets aren't about morality, well, that's for sure. And they'll just keep moving the market up. So the only thing that will stop it today, like I say, is a lot of volatility come 1 p.m. and also towards the close of today's session, depending on how many trillions of dollars worth of options are at the money. I suppose is going to be the biggest play. Anything else outside of that will expire anyway, either worthless or has already expired because there's no time value left and it's all decayed. So anyway, yesterday the market was oversold in the Dow. We had a 89% retracement. Market kicked off, moved up all day. Overnight we had a bit of a drop down, but the market now managing to move to the upside at the moment. If you have a look at the 5-minute chart, you'll see exactly what I mean. The market recovering there. And there's the overnight bit about nuclear again. But I noticed there's also peace talks going on again as Russia's already ahead. Not a 15-point plan. There was some other plan that they've come up with. So again, you've got to throw that into the mix today as well. In the German DAX, which is here, you can see the market also moving higher. We had a bit of supply yesterday, a very narrow day for the DAX, you can see, and we're overbought at the moment in the daily chart. But again, they're going to try and keep this market moving up, take out the 50% retracement, 89, and then you're going to have this resistance that is here, and they'll keep moving this as much as they can to the upside. And there's the all-time high. Don't be surprised if we get back there. Don't be surprised at all. It'll be a first given that we've got a war on, but there you go. There's a first for everything in the markets, and that's likely to be the case. The 30-minute chart is for yesterday was different to the Dow. It was overbought, and the market slammed to the downside till we were oversold, and the momentum started to shift. We've got divergence, crossover, then we get the retracement of 89%, and then the market moved up till we became overbought, and then the retracement, and then down, and at the moment we're now overbought. So the market's struggling a bit in this area. So from the high down to the low, you'll see the market stopping at 89% at the moment, waiting for the futures to open. You could see a bit of an initial down move to the DP, and then back, and then depending on what happens as we start to liquidate the derivatives, the 3 trillion of them, we'll see the market volatility actually increase. But the futures opens at 7. See how that reacts. It should be fine. It's the US derivatives that's at 1 p.m. is when it all kicks off. So until then, they can keep moving the market to the upside. Yesterday's activity in the smaller time frame, the DAX moving lower in the futures, becoming oversold, demand getting back above the 200. We then became overbought, and then we got the retracement before the market then made its way down with a re-entry. And then this bar here is the UK increasing interest rates again to 0.75. So they're going to continue to do this till they get inflation under control. Good luck with that. With 25 basis point increments, that's not going to happen, is it? Let's face it. It's like trying to put a house fire out with a teacup. The market then moved higher after it and then made its way down until the Dow came in. And once the Dow came in, the market moved up with it. But again, we were overbought, and then the market down, and then following through with the Dow in the evening and moving to the upside until overnight. Like I say, we had this so-called nuclear threat market then finding support and then just hugging the 5-bar moving average as they've moved the market to the upside. Only one red bar there at the moment, so free to move to the upside. A lot of resistance there to take out from the previous highs in the 5-minute chart. In the there we go. In the JPY, continuing to move to the upside against the dollar. The dollar showing a bit of weakness at the moment. Stuck at the 78, needs to take out the 89 to get back to the highs that we see here and one further off the chart, but still bullish for the yen at the moment. You can see the reaction to the interest rate increase yesterday at 12.30 because we're an hour difference at the moment, straight down to the DP. Again, momentum comes back. We've got demand at the DP level. Market then makes its way back to the upside. Currently from here down to here we're sitting at 78% retracement, and we have the BRN there as resistance as well. This requires the dollar to continue to keep falling in order to rise, but the dollar's got a bit of strength overnight because I know the metals are down. Pound managing to come off these lows, but nothing like you're seeing in the yen against the dollar. The pound is incredibly weak actually, as can be seen here by the daily chart, and in the 30-minute chart you'll see the slam down there, 100 points on the rate increase, which is bizarre because normally if you increase interest rates it's positive for the currency, but it was slammed down, and then the market has managed to work its way back, which is really odd price action there. But then we're living in strange and odd times, aren't we? And then finally in the metals we've got silver up yesterday, not a great deal, low volume. It's going to be hammered to the downside today. If I recall, when we have the quadruple witching, you tend to find the metals come under pressure as well. So I'm expecting this still to go down to that 200. At the moment it's still showing weakness. There's no strength in here at all, as you can see. Yesterday they managed to move the market up all morning, but not a great deal. It was only about 30-40 cents. And then it came all the way back, bit of a bounce with the nuclear thing, and then down, and watch the low taken out in the next couple of hours. I suspect that's already marked up for JP Morgan. Crude oil though is moving back to the upside, coming off that 89. We were up I think $7, $7 or $8 yesterday, heading back now to all of these fibs. We haven't seen the end of this yet. There was a news item on Zero Hedge talking about $200 a barrel. I wouldn't disagree with that at the moment. That's very much likely. Gold also, a lot more volume in gold and demand, but still showing that weakness. They'll hammer this if they can back down to the 89. For sure, anything to actually keep the price suppressed so that it looks like they've got control of inflation. And then finally, the dollar, I say, was just starting to move back to the upside after a couple of days of being down. A lot of selling around there yesterday, but yeah, it's starting to show a bit of strength there. So it'll be an interesting day. Option expiration today, big one, and we'll see what happens when that kicks off at 1 p.m. Okay, actually it'll be 12 p.m, won't it? Thinking about it, it's normally 1 p.m, but we've got that hour difference. So yes, it will be midday today when the options volatility option expiration kicks in. Okay, that's it for today and for this week. Have a great weekend. Let's see, as I say, see what happens at midday. And with that, as ever, thanks for watching. See you in the next one.